Good morning, beautiful people. It is Joel McElhaney coming to you live. This is Labor Day weekend, and today I'm going to talk about what's going on with interest rates. And there's an announcement coming up on September the 6th about whether the Bank of Canada will decide to increase rates. So I've been researching what the economists are saying, and so there's a bit of a non-consensus on terms of what's going to happen, but I'll give you some of the insight that I'm receiving on this topic. So the Bank of Canada's been on a communication hiatus for the last month with regards to what they're going to do with the key interest rate. So everyone's wondering what's going to happen. So there are two Bay Street number crunchers that an article that I read in the Financial Post recently talked about, Stephen Brown and Derek Holt. And so we're just going to see what they have to say. So they are kind of responding to what Tiff Macklem said last month in his July 12th statement, when he said they'll be evaluating whether the evolution of excess demand, inflation, wage growth, and corporate pricing behavior are consistent with achieving the 2% inflation target. So those are really the metrics that the Bank of Canada is looking at. So therefore, in order to help determine what's going to happen, we need to look at those metrics. So Brown from Capital Economics said the bank can afford to wait, and it's for its upcoming September 6th decision. On the other hand, the bank should hike again, if needed, until they have clarity on the inflation risk that it has been reduced. So the Bank of Canada's benchmark interest rate now stands at a 22-year high of 5% as the battle on inflation continues. And we've all seen that if you've gone to buy groceries or basic needs or gasoline, these kinds of things, we see that prices of these things are up. So the markets are predicting a 25% chance of a rate hike in September and a 60% chance of an increase by the end of the year, according to data from Bloomberg. So both economists sort of looked at the data and gave us their positions. So again, Brown, who's the deputy chief economist for North America, said the Bank of Canada will have to wait until the release of the October consumer and business surveys to figure out whether inflation is where it's heading. And that makes a lot of sense. It's hard for them to make a decision on September 6th when the new inflation numbers aren't even published yet. So I don't know, inflation numbers are basically a month and a half behind before they get published. So that is always something that's, helpful in the decision process. And that information won't be available to the Bank of Canada for their decision on the 6th. So also fresh insight on corporate pricing also won't be available till then. So again, those are the first two metrics that Tiff Macklem wanted to base this decision on, and that data is not available until October timeframe. So also with regards to the labor market, Brown said there are signs that the labor market is loosening as the unemployment rate rises and job listings fall. So the jobless rate in Canada is now 5.5%, up from the multi-decades low of 4.9 in June of 2022. Further, the economist doesn't think the economy is in excess demand, which can heat inflation, and he argues that demand is mostly the result of ongoing post-pandemic recoveries, and that interest rate sensitive sectors such as housing, which is my field, are already slumping. And that I don't know if I fully agree with that. Of course, they're probably looking at the bigger markets, and we are seeing that happen in some of the bigger Canadian markets right now. And likely that may follow suit in our market. It's hard to determine because our market hasn't always behaved like the other Canadian markets. Keep in mind, real estate is local, And so what's happening in our local St. John market may not be reflective of what's happening in Toronto, which gets a lot of press, or Vancouver, or whatever the case. So Brown does expect inflation to creep up again in August to 3.8% based on fuel costs, and 3.6% for the quarter. So that's his opinion. Now, Holt, on the other hand, isn't quite on the same page. He said core inflation, which excludes mortgage interest costs, is still hot, coming in at 4.25% in the annualized for the Bank of Canada with their preferred measures. So wages are being pushed up, he feels, most notably by what's going on with collective bargaining with unions and the pressures that loom with the automotive and education sectors, which are all in this bargaining process, and they're all seeking higher pay. So Holt, unlike Brown, relied on inflation expectations from the bank's survey released in July that showed consumers and businesses expect inflation to exceed the bank's target range over the next 2 years. So a little bit of a very different opinion. And he says there is substantial risk that the Bank of Canada hikes again on September 6th, and a slight bias toward a hold may be further informed by gross domestic product figures, or GDP figures. So when those are released. So it'll be very interesting to see what happens on the 6th. Two very well-known and economists are coming in with different opinions on the subject. But again, we will find out on the 6th, and I'll give you an update at that time. So until then, keep being awesome and have a great Labor Day weekend.